So hi everyone, my name is Lisa, and today I'm here to talk about innovation and the impact that it will have on the future of financial services. And to start off, I just want to go over two definitions that will kind of set the tone for today's discussion. The first term, disruptive innovation, refers to an innovation that creates a new market and value network and eventually disrupts an existing market and value network, displacing established market leaders and alliances. Another definition for disruptive innovation that I just wanted to share is an innovation that transforms an existing industry by introducing simplicity, accessibility, convenience, and affordability where complication and high costs are the status quo. So an example of this would be the PC, which was introduced into a computing industry where computers were not for personal use and only expensive mainframes were the main product. The innovation improved little by little until it created a new market and eliminated the existing industry. So the second term is Fintech, which is short for financial technology, and it was coined to describe the emerging industry of startups that utilizes technology to deliver efficient new solutions, and those solutions represent a disruptive innovation development of applications, processes, business models, and products in the financial services industry. So examples of this would be if you use your phones online or on mobile banking, if you use your credit card's tap function, if you've deposited a check by taking a picture of it through your phone's mobile service. Fintech will be the focus of my presentation today, and that's because as banking is becoming more digitalized, more and more technologies like these will be emerging, adding convenience and value to all of our lives. So just to go over the agenda for today, I'll be starting with the current functions of the financial sector, and then briefly discussing fintech companies and what areas they're moving into, what applications are currently being developed and will be developed, and then briefly go over just the risks and barriers that the fintech industry is facing, and what potential outcomes and scenarios might result as a result from this disruption. So the Canadian financial services sector encompasses three main components, which is banking, insurance, and real estate. But today I'll be talking mostly about banking and touching a little bit on insurance as well. So the Canadian banking sector is extremely competitive. There's 80 domestic and foreign banks operating in the country. So because accessibility is so high and consumers have so much choice, people aren't going to hesitate to switch institutions that can better meet their needs if that's not the institution that they're currently at, which is why it's so important for banks to continuously come out with more innovative ways to add value for their customers. This is just a nice infographic that shows the various methods that people can choose to conduct their banking with, whether that's at the ATM, with their mobile app, online, or in branch, or at various international branches of Canadian banks. So out of those options in the previous slide, a little over half of Canadians stated online banking to be their main method that they prefer. And mobile banking is also increasing in popularity, with 43% of Canadians stating that they expect to be using mobile banking as their main method in the near future. So almost all Canadians, 90% of them, stated that the innovations have made banking more convenient, which virtually allows them to bank wherever and whenever they want. So consumers are clearly embracing technologies, and preferences are leaning more towards digital forms of banking. Some attribute this to the shift in market composition from Generation X to Gen Y consumers, because millennials have a more electronically connected lifestyle, which is actually driving most of the disruptions across various industries. So this is where fintech companies come into the picture. As you can see, there are already numerous successful startups in the industry, and they cover various areas such as payments, investments, funding, lending, and more. But the technological capabilities of these companies has shown the potential to offer lower cost but higher accuracy services than the large banks currently do. And so this has sparked interest worldwide from venture capitalists. We can see here that since 2008, global investment in fintech has actually increased 12-fold to more than 12 billion in 2014. And in 2014 alone, the global investment in fintech increased 201% compared to just overall venture capitalist investment, which only increased by 63%. So Clearly, people are excited at the prospects of this industry, and with such a large pool of funding, we can be sure to hear and see more from fintech companies over the next year. So now we can get into some of the more exciting applications that fintech companies are currently developing. I'm going to cover quite a few, so I've grouped them by the category of innovation that they fit into, and we're going to cover 4 main categories of innovation, which is artificial intelligence and big data, the sharing economy, the blockchain, and the Internet of Things. So to start off with artificial intelligence or machine learning and big data, these are 2 closely related innovations that are currently being applied by fintech companies mainly to drive the automation of services and processes across banking and insurance. The examples I'll be covering are banking robots, robo-advisors, vehicle telematics, and smart apps for your phone. So much like the previous presentation, this is an example of the use of robots in the customer-facing role, especially in banking. This is the first machine learning innovation that we'll be covering, and the robots in banking have the potential to increase accuracy and efficiency of transactions, lower operational costs, better manage repeatable tasks, reduce human error, and the list goes on. The robot pictured on the very left is the Now robot, created by a French company and was actually made publicly available in 2011. It's one of the first customer service humanoid robots to be employed by a major financial institution, which was the Bank of Tokyo last year in April. Now can speak 19 languages, remember details from over 5.5 million customers, and over 100 different products as well. So similarly, in the middle, we have Pepper, which was actually made by the same French company and was employed by Mizuho Bank. Pepper has an emotion engine that actually recognizes human feelings. So they're both capable of ongoing learning, which essentially allows them to learn from every customer interaction and then increase the accuracy of subsequent interactions. Right now, the robots are not intended to replace branch staff, but they're being used more to meet and greet customers or answer simple questions in various languages, and just free up more time for the staff to use their time for other valuable services. And then the next category of innovation that we have in AI and big data is on the same slide, which are robo-advisors, which provide online automated financial advice. There have been a few successful startups already, such as Nest Wealth, Betterment, and Wealthfront, which are pictured there. And the main benefits of these automated advisors is that they have much lower investment management fees, and they increase the accessibility of services that are typically available only to higher net worth clients. So next, there have also been mobile learning apps coming out, such as Mint, which some of you may have heard of or even used. And these are capable of tracking and learning user spending habits, then providing financial tips or saving alerts for you. Another example would be the app called Wallet AI, which is a little more comprehensive, but it uses contextual learning to analyze your transaction history and your data trail and familiarize itself with your spending habits so that it can provide timely financial advice. So if you were going to pick up your afternoon coffee, it might pop up with a notification suggesting that you go to Tim Hortons instead of Starbucks. So the last thing within the AI and big data category is vehicle telematics. Telematics refers to automobile systems that combine telecommunication and data analytics. So an example would just be your GPS. Telematics car insurance, also known as black box insurance, involves installing a black box into the user's car, and this would be able to monitor their driving and actually report real-time data back to the insurance company. It's supposed to be even able to connect with your other devices, so it could provide driving feedback. And by delivering better data analytics to the companies, there's a potential for good drivers to lower their car insurance premiums. So the next innovation we'll be covering is the sharing economy, which refers to individuals lending and sharing assets and services directly with each other, usually coordinated by a sharing network, mostly running over the internet. So this has The sharing economy has mainly given rise to alternative financing activities. The four main ones are listed there: peer-to-peer lending, crowdfunding, peer-to-peer payments, and also alternative currencies like the cryptocurrency. So, starting with peer-to-peer lending, a successful lending platform made in the US was the Lending Club, and it helps business owners secure funding from other individuals. And the main benefits of this is that it gives lower financing costs for borrowers and higher returns for lenders than it would compared to traditional bank lending. And it also gives the opportunity for borrowers who are higher risk and typically wouldn't be able to secure a bank loan due to their low credit. So the next one, crowdfunding, is one that you may have all heard of through Kickstarter, which it basically is a platform that allows small business or entrepreneurs, small businesses to raise project capital from a large population of individual investors. And the benefits of this would just be if you're a struggling small business, you have the opportunity to showcase your project worldwide and increase your customer base as well. The next one, peer-to-peer payments, is one of the most popular and fastest growing fintech sectors. It's a means of transferring value using your mobile device. So one really popular one in the States is called the Square for your phone app, for your phone. And lastly, cryptocurrency is digital currencies, and the most famous one is Bitcoin. They use a peer-to-peer structure to facilitate transactions between parties, and so without the need of intermediary. So all the transactions are recorded on a database called the blockchain, which is actually our next main category of innovation. This one is a little more dry, but it could potentially have one of the largest effects on the financial services industry. This infographic kind of simplifies explanation of what the blockchain is and how it works. So the blockchain is a database, and every transaction is recorded on the database as a block. And then all participants broadcast their transactions to a shared public ledger, and all participants have an identical copy of that ledger. Then the transaction is just verified through a database synchronizing mechanism. So basically, with all the technical things aside, what this has the potential to do is essentially replace the need for a third-party institution to provide trust for financial, contract, and voting activities. So the main two things that people are excited about regarding the blockchain, the first is smart contracts, which could be used to enforce terms and conditions without a third party, and this would essentially replace the need for standard business contracts. And also the second thing is the widespread use of a distributed ledger. The blockchain is a type of distributed ledger, but with widespread use, if more and more financial institutions adopt this, it would just improve the transparency of flow of funds between institutions and make transactions more instantaneous. So our last main category is the Internet of Things, which refers to intelligent devices increasing the digital presence of individuals. An example of this would be wearable technologies such as the Apple Watch, which have embedded chips that connect the article and the person wearing the article of clothing to the internet. The idea of smart homes, smart cars, and smart cities just is related to the use of smart sensors, which can be integrated into homes, vehicles, and buildings, and that would be able to provide real-time data insights and analytics to users such as insurance companies. So as the internet is embedded into more products and services, there will be a blurring between the digital and physical worlds, which would ultimately result in more accurate consumer information, which would greatly change the personalization and accuracy of insurance products such as home and health insurance. So after covering all of those examples, it's apparent that the disruptions of the fintech sector are just beginning, and we can expect that they will increase in number in the near future. But to summarize some of the main market impacts that these disruptions might have, specifically in banking first, we'll be seeing more alternative platforms, such as the peer-to-peer and platforms that are offered by independent third-party companies for services such as payments, lending, as we saw from all those examples. And there's the potential disintermediation of traditional banks and other institutions as the main intermediary, because right now their main role is just to serve as the middle party between businesses, corporations, personal households and the government. So with the introduction of technologies like the blockchain, there might not be a purpose for their current role anymore. And we can expect to see more automation of high-value services with the robo-advisors and all of that. So in the insurance sector, just the idea of the smarter, cheaper sensors being made continuously will definitely increase the use of telematics, which would greatly change the way that customer information is delivered to insurance companies, and they'd have details that are kind of on a completely different level than they have now. Services will become extremely personalized, but there is also the chance with the growth of things like the Internet of Things and the sharing economy, that there's an increase in bundled insurance products, which we didn't touch on too much, but it's just where insurance policies are integrated with other services. So an example of this would be Uber offering auto liability insurance. That would greatly affect the competitiveness of insurance companies because there might not be a need for that anymore. So while fintech innovations clearly have a lot of potential benefits, the mainstream transition towards using these technologies has also raised some heavy concerns. The main issues kind of deal with regulatory uncertainty, given that the financial services industry is highly regulated, especially if you're dealing with trades of large volume or large deals. There's a concern that unclear regulations could lead to risky situations, and that would cause serious and lasting economic consequences. Another big one is data security and privacy breaches. Specific examples of this might include identity theft if the machine applications aren't able to detect highly skilled impersonators, hackers compromising the automated financial advice services and giving faulty advice or misleading advice. And in general, cybersecurity risk will increase since hacking or release of personal information could be destructive in a world where almost every aspect of human life is connected and shared. And there's also some concerns about just the quality and implementation of these AI or these technologies. For example, the quality of advice provided by robo-advisors and whether they'll be able to explain the recommendations of their financial plan clearly enough to customers. So just to end off with some food for thought, I just want to present some possible scenarios. Obviously, the net outcome of these technologies is still pretty unclear at this point, but these three scenarios could be potentially what our world looks like 20 to 30 years from now as a result of these disruptions. So the first one, a world without banks. Maybe all core services would be delivered by third parties and outside of the regulated bank industry. A world with no cash, that could just mean that all payments and transfers of values are digitalized, or that the world is using only cryptocurrencies. And lastly, expanding on the idea of the Internet of Things, we could eventually live in a world that's so highly connected that risk could be priced to the minute, and all aspects of health could be monitored. So the cost of an individual's health and life insurance could go down every time they go to the gym, or digital tracking could be aligned with other satellite information to provide real-time analysis of risks for activities like goods transportation, and factors like weather could be priced in. So in summary, the emerging innovations within the financial services industry as a result of the fintech revolution raises the need for current institutions such as banks and insurance companies to reevaluate their strategic focus to remain relevant. And despite the recent investment boom in fintech and the successes of various fintech startups, there's still long-term uncertainties such as data security and regulatory concerns that require further consideration and could pose a material threat to the future of the industry. But overall, the continuous pressure to innovate will shape customer behaviors, business models, and the long-term structure of the financial services industry. So thank you for listening. If you have any questions, I'd be happy to take them now.
So on Star Trek, do you think the situation with money on Star Trek is contained in one of the scenarios? Is it just that they don't use cash, or they have some alternative method? Or is it really a world without money? You really didn't mention that. I guess fintech, if you have a world without money, maybe fintech wouldn't exist anymore. But in your opinion, is a world without money, or a Star Trek-like world where things like money are never discussed? Is that maybe not possible, as you see?
In my opinion, I don't think that's possible. I think the situations I discussed were more that the value of money is not in physical form, but just digitalized. But even before the creation of actual cash money, people were trading and everything. So I think there has to be some sort of transfer of value. And this is more discussing, what that could look like, whether it's just digitalized currency. But I think there has to be a form of value that's being transferred.
So that has to do with human motivation, right? So if we believe that something like money is required by the human psyche to motivate us, you can imagine that maybe that's not so. Although certainly every minute of every day makes you think that it is so. Money runs the world, and the world would be able to do anything without it. But what do you all think? I mean, first of all, what do you think? Do you think Star Trek just bypasses the issue that the writers of Star Trek really didn't have a plan? They just thought, well, if we leave out discussions of money, that would be totally cool. Let somebody else figure it out. Or what do you think?
Money is possibly just a byproduct of
Yes.
a way to deal with scarcity and its position in society, just like high position in that one resources. And I don't know, I just feel like it's a byproduct of inequality. As long as there's inequality, we need some sort of way to improve the inequality. That's what money does.
Yeah.
It proves that I have.
So this whole idea of unfulfilled reality, I mean, like every single one of you, when you wake up in the morning, you think of things you want, you can't have, and things that you want to do that you can't do. But actually, you could imagine a post-scarcity world of abundance where neither one of those things were true, where things you want you can have, and you can have any experience, you can share it with friends, virtual reality is better than real, and so on.
I don't know if I can buy into that one that you can have anything you want. For example, there's only one of my life. But I'm not sharing. So there's always going to be some things in life that I think are scarce. There's only so much beachfront property, and some people won't be satisfied with pretend property in the virtual world or pretend experiences.
Yeah, well, I guess the theory, at least, is that virtual reality will be so good that psychologically it does satisfy most humans. You can make a kind of political decision that you're not going to try it, you're not going to do that. But if you did, I guess in theory, you would find it satisfying.
You could make that kind of behavior culturally just super. Also, history. I feel like that's just something that in culture that, like, I'm on a real beachfront. It's just like, ugh, go for that guy. He's weird. I think that's something that could be I don't know, like if you believe you deserve that beachfront property more than anyone else, then I think that is not perfect.
Who said anything about this? I mean, you still want it, even if you know that
Okay.
everyone else should have
That's-
as much
yeah,
rights
yeah.
as you do. There's only so much space there.
I agree with that.
Can I ask about the presentation? So you talked about blockchain. Do you know any details about? I've heard it's becoming kind of a critical mass where it's so slow to process the blockchain that it's not really that feasible.
Yeah, I think that's what I read one article on it, and I think that's their main. They need to get past the processing ability of it, but I don't know much more about the developments. I think most people feel more positively about the fact that they can overcome that once you just increase the processing power and such, that it would become feasible.
The other thing is, the problem with the Bitcoin right now is, they're still mining for the coins, which is like a really weird, silly process. They basically look for zeros. And it's like, if we could like fold proteins, that would be probably cooler. But once that's done, like, there'll be probably a lot less people going for the transaction rewards because they're like, not nearly as high as. So like it's kind of weird. That might reduce it. I also like kind of leads into like one of my questions. What about technologies that are kind of like just not? They feel kind of useless. Like so with the like Bitcoin mining, they're looking for zeros. As far as I'm aware, like there's no use in that other than